Hello everyone. As the events unfold and Evergrande defaulted last week, the shock waves have obliterated the housing market in China, resulting in the default of record number of developers in December. I will share some key news and data which will help us in putting the pieces of the gloomy picture of Chinese real estate markets together. We will dig deep beneath the surface to look at its implications and where it can eventually go. So as the whole Chinese real estate sector crumbles, speculation about troubles at niche developer Shimao Group Holdings is making fresh headlines. After rating agencies declared default at two relative giants, China Evergrande Group and Kaiser Group Holdings. Now it is very strange. With Kaiser and Evergrande, it looks like the largest defaults have already happened, and now investors with highest risk tolerance are looking for the potential survivors. And those investors interested in stocks have a long list of distressed names to choose from in China and across emerging markets. But it is a gamble which I don't think is worth playing, since the uncertainty created by Chinese regulators will result in China's prolonged, chaotic and engineered property recession. I think it is next to impossible to shortlist the survivors in the current state of the market. And for some bond buyers, on the other hand, the double-digit yields that are on offer from many Chinese developers are quite attractive. If you look for spread elsewhere in the world, there is none. This makes Chinese property bond market very exciting. But as I mentioned, as attractive as these opportunities may seem, the probability of making solid gains would depend on the selection of developers with healthy finances. I have been warning about the default of Evergrande, and this is the first domino to fall. And I also warned about the contagion. It means the transmission of a disease from one person to another by direct or indirect contact. Now in the case of economics, it means that if one financial institution falls that has a pivotal role in the financial system or economy or a sector, its effects will ripple across to the other companies in the market. And no business is an isolated island. And when a big player in an industry goes down, the suppliers and the creditors also suffer as a result. And most of all, the market sentiment becomes negative, and that causes the share prices of the other firms to plummet. And since we are in a connected world, the effects of crisis in the second largest economy in the world will definitely ripple across to the other countries in the world. The same phenomena happened in the global financial crisis of 2008. The fall of Lehman Brothers caused a ripple effect in the global markets, and I saw the chaos where many people lost their life savings. And as we know, the stock markets across the globe are now plummeting. The evaluations of companies have already gone so high that it does not make any sense. When speculation, greed, and fear of missing out are at their extreme, I think the storm is not that far. With that, the ongoing real estate crisis and the uncertainty and panic caused by the Omicron variant did the rest. The non-correlated assets like cryptocurrencies are also taking a nosedive, and hence we should be careful while investing in these turbulent times. And as the stocks are obliterating, people are running towards bonds, and the US Treasury yields are falling, since as the people buy the bonds, the yields go down consequently. So in China, the things are accelerating. China is ramping up support for the embattled real estate sector as growing stress in the industry threatens to deepen an economic slowdown. December is poised to be a record month for Chinese offshore corporate defaults after missing payments by indebted developers. Chinese developers have defaulted on a record $3.8 billion in offshore bonds so far this month, according to the data compiled by Bloomberg. The previous high was in January, when borrowers failed to repay $2.7 billion of such notes. But this is not all. Looking at the big picture, during this year, Chinese borrowers have defaulted on $13.3 billion of offshore bonds, with real estate firms making up half of that total. More credit risk is simmering, with January set to be an even busier month for maturities. Chinese developers need to repay or refinance about $6 billion bonds by then. And yes, the yields on the bonds in the junk bond market are hovering in the sky and are as high as 25%. But I am absolutely sure that these firms cannot pay this high interest rate. And this will lead to even more defaults. And as a result, the offshore financing channels are shutting down for the Chinese firms. And don't take my word for it. HSBC has already stated that it will reopen funding for highest quality Chinese property developers in the second half of 2022. I think it would be a very daunting task to find the highest quality Chinese developers, meaning those with debt that they can pay back or service easily. As the Chinese economy falters, it will affect all of its significant trading partners, which basically means the entire world. Countries around the globe will suffer from the slower and more expensive exports as well as reduced demand for imports. Companies in China are suffering from supply chain disruption, higher input costs, pollution curbs, and logistical issues due to pandemic measures such as fuel rationing, electricity rationing, and disruption at ports. Factory gate prices, the prices of products at the factory, have been steadily rising. All of these circumstances have driven factory inflation to its highest level in 13 years. Also, the construction in China has reduced and the economy is sluggish. Factory outputs, which were once the drivers of the Chinese economy, have now slowed down significantly. Imports of steel are down, coal imports are going down too, and the sellers of energy and coal to China, such as Mongolia or Russia, will suffer. And not only that, the raw materials and mineral exports in Africa and other developing parts of the world could suffer from a reduction in new construction in China. Companies heavily invested in China will also suffer. Additionally, US pension funds, individuals and institutional investors will suffer as they are invested in the $2.1 trillion of Chinese companies listed on American exchanges. Holders of China's foreign currency debt will also be at risk to the tune of 2.4 trillion US dollars. Developing countries dependent on the completion of infrastructure projects through China's Belt and Road Initiative could be left with unfinished building sites, highways and power generation plants that prove to be both expensive and useless. Currently, Belt and Road projects are valued at over $1 trillion across 139 countries around the globe. In short, everyone from the most to the least developed nations could be impacted by a collapse of the Chinese economy. Most likely, the Chinese economy will no longer grow at the incredible pace that it has for the past 3 decades. Apart from destructive control decisions taken by Xi Jinping and the Chinese Communist Party, the Chinese population is aging and the workforce is shrinking, which will also put brakes on the growth prospects. It is extremely unlikely that the Chinese Communist Party will be able to solve all of these problems or completely turn the economy around. The Chinese economy is too big and too complex to be able to remedy the deeply ingrained issues that have become endemic. To bring the Chinese economy in line with those of the Western nations, particularly the United States, the Chinese Communist Party would have to undertake deep systematic changes that it is unwilling to consider, such as decentralization of control, granting rural land rights, and exposing the economy to risky market forces. The current economic problems, while tremendous, do not signal the end of China as a global power. The country is more than likely to remain the world's second largest economy and the primary rival of United States. The Chinese role will change, however, in that they will be less of a driver of global growth and will no longer be speeding inevitably towards the position of paramount world power. Let me know in the comments below, do you agree with what I stated in the video? Also, let me know in the comments below, what is your opinion about the current state of the markets and Chinese economy? Thank you for your time and appreciating my content. If you like such videos, please consider subscribing. I publish videos on personal finance, investing, and macroeconomic outlook of the economies across the globe each week. Also, please comment on the video and leave a like to bless the YouTube algorithm. I will appreciate your support. Also, I have mentioned a link to BlockFi in the description, which will give you up to $250 US worth of free Bitcoin when you use it. It will also give you 9% interest on stable coins, which is way higher than the 0.5 or 1% interest which you will get when you put your money in a savings account with a bank. Have a nice day and I will see you in the next video.